I'm Rob Waldron of Integrity Financial Associates, and today we'll be looking at business protection. Now, many people will, when asked, is your business protected, automatically assume that this refers to the physical premises, the stock, employer's liability insurance, and so on. Now, they are all important parts of the firm to be covered, but many businesses in the UK, especially small and medium-sized ones, rely heavily on key people to ensure that everything gets done. These people are often the business owners as well. What would happen to the business if something happened to one of them? As with all insurance products, it's vital to have a bespoke package recommended for you by a professional rather than a one-size-fits-all product. Today I'll be looking at key person and ownership protection. Key person. You may already have identified who is key to your business and designed a very attractive package to try and keep these vital people in your firm. But what if they left one Friday afternoon and never came back to work? You had a phone call from their partner saying that they needed 6 or 8 months off to recoup from a heart attack. Who in your firm could take their place? Who has the skills to do what they do? Who has built up the rapport with the bank and the clients and suppliers to ensure the smooth running of your company? Key person cover is designed to protect a business against the adverse effects of losing one of their key people due to death or serious illness. So how do you calculate the amount? There are no hard and fast rules on this, as each policy is created on its own merits, but there are some ideas on how to calculate them. Multiple of profits, for instance. As one of the main objectives is to protect the profitability of the business, looking at profit is a good start. You could use multiple of salary, say between 7 to 10 times. This is fine for a non-shareholding employee, but special care needs to be taken for shareholding employees who are taking, say, a reduced salary to build the business or taking dividends for tax reasons. Proportion of payroll. This method can cover the key person's contribution to the turnover. Once again, be careful if the key person is also a shareholder. You may also want to think about how much it will cost to replace that person. Salary for salary is only the beginning. How much will the recruiter charge? Will you need to offer a relocation package or a golden hello? Some people like to use this formula. Key person's salary times the turnover times the year to recruit and train a replacement divided by the total salaries. Ownership protection. The loss of a partner or shareholding director of a company can have a major impact on the business, not just on the day-to-day running of the firm, but also on how major business decisions are made and how the firm runs in the future. As humans, we don't want to think about our own mortality, but what would happen to your business and family if something happened to you? Would the business be able to provide for your family? Would your family want to be involved in the business? Or would they be able to sell the shares they newly acquired to someone else? At this stage, it's important to mention the Articles of Association. Any company will have them. It's vital that these are checked by a professional and kept up to date. If one of the co-owners dies, who would get their shares? Would they have a working knowledge of the firm, and would they be able to take over the reins? Would you want them to work with you? Many times people inherit shares in a firm that are not exactly what they would have wanted, so they sell them, possibly to a competitor. Or maybe they do see themselves as a business tycoon that doesn't have any real business sense. Has your business got the cash right now to buy out a shareholder if they become seriously ill or die? A good starting point is perhaps to do a risk plan on your business with the members of staff that are important to the running of your company. Check your subs bench and see how they would feel about taking on the new role that you're going to offer them. 20% of people are likely to be off work for more than 6 months before they're 65. That was from The Independent in March of 2010. 44% of businesses could fail if a key person becomes seriously ill or dies. That's from the British Chamber of Commerce in 2009. The Chamber of Commerce asked businesses in 2009 what would have the biggest impact on your firm. 69% replied death or serious illness of an owner. Now, you may not think insurance is particularly exciting, but as with all aspects of business, planning is key. So if you want to see what products are on the market and have a bespoke illustration provided for you, please feel free to get in contact with me. Rob Waldron, Integrity Financial Associates.